on to our first interview. Well, the Kenyan shilling is one of the most traded currencies in sub-Saharan Africa. Online forex trading is a highly regulated space by the Capital Markets Authority, which is the only entity empowered by the law to issue license to any person or entity interested in conducting the business of online forex trading in the country. Now, here to talk more about the phenomenon is Matthew Mukisu, Manager Derivatives from the Capital Markets Authority. Welcome, Matthew.
Thank you.
Pleasure to have you with us because, of course, this space is one of intrigue and so many people have a lot of questions about it, and especially with the regulation of it. So let's begin with a quick breakdown from you. What does online forex trading mean, and what is required of someone to engage in this?
Thank you, Malika. Before I answer that, I think it's important for me to just highlight quickly to the viewers on the mandate of the Capital Markets Authority. The Capital Markets Authority is a statutory body under the Finance Ministry, mandated with a twin mandate of regulation and providing facilitation in terms of development of capital markets intermediaries. And among the intermediaries, we have Nairobi Securities Exchange, we have the Central Depository Corporation, we have fund managers, we have stockbrokers, and of course we have now what we are talking about, the derivative brokers, the online forex brokers, and the money managers, among others.
Okay.
So to go to your question in terms of what online forex trading is.
Yes.
Online forex trading is basically an internet-based trading that gives clients opportunity to trade on movement in currency pairs without actually having bought those currencies. And this mainly happens through global platforms. Now, the online forex is just one of what we call contract for differences. Otherwise, others are those whose underlying are commodities and equities. But for online forex trading, the underlying is a currency. So basically, for the contract of difference, is that you make your money or lose by the differential, the price differential between the time you enter the contract and the time you exit the contract.
Okay, so that's also one of the main differences, I believe, then between forex and equities trading?
Yes, in equities trading, you actually buy the actual equity instrument. But in forex trading, let's use the word online forex trading.
Yes.
Because when we just refer to online to forex trading, we can confuse the audience, because forex trading is happening in banks, it's happening in forex bureaus where you actually buy the actual currency. But this one we are talking about online is happening in a space that is not centralized like an exchange, but we have different global platforms connected to liquidity providers, big banks like JP Morgan and UBS. So basically what happens is that the client enters into a contract, you trade a contract, and then you don't have to buy a whole currency. For example, if you are buying GBP, but you say, okay, fine, I want to have an exposure of, let's say, 1,000 units of sterling pound, and the underlying is and against the USD. You have to trade currency pairs. Now what you do is that you give some margin deposit, which is a small percentage of overall contract, let's say at 2%. Then now, as time moves, you may want to exit that contract depending on your options. Now, basically is that when you move out, you have either gained or lost. Now, if you have gained, then the small deposit that you input, it goes up. But if you have lost, the amount that you put as a margin deposit or a collateral, it's actually utilized to pay the person who has gained.
Okay, so it's all to do with the margins and how much you can take away from that,
yes.
I assume.
Yeah.
All right. Now, the EGM Securities in July of this year launched the country's first locally regulated foreign exchange electronic trading platform. And Kenyan investors who wished to trade currencies on the internet have previously had access to international brokers, but none was overseen by, of course, the CMA until EGM Securities this year.
Yeah, I think it's out of realization that the Kenyan capital markets has grown, and this is pegged on our capital markets master plan, especially Pillar 2 on infrastructure market and sophistication. And so we are aware that Kenya, especially the young population, they have been engaged in online forex trading in global platforms, and some of them are regulated globally, others are not.
Yes.
And basically, as part of this interview, to sensitize our viewers and those who participate, that when they are using the global platforms, they need to vet, check through if these people are regulated or licensed.
Yes, because
otherwise,
of course
some
they're
of them
regulated by the home companies.
By home companies.
Yes.
Now, we found the need of bringing this closer home by, first of all, coming up with a regulation which went through stakeholder consultation. And I'm happy to say that right now there is a capital markets online foreign exchange regulations 2017 that came into effect August 2017, and that is anchored under our Capital Markets Act that facilitates in terms of giving the regulatory framework for licensing and approval of financial intermediaries that offer clients solutions around online forex trading. And the categories are just three. One is dealing broker, where this broker, if you are licensed as a dealing broker, you are able to trade on your own book in terms of buy the client positions and take them offshore. But non-dealing is just like you are just a broker in the strict sense of a broker, in that clients pass through you to get into the international market. And so the EGM securities you have just mentioned, they are under that license category. Okay. Now, the third one is a money manager. These are basically portfolio managers, and they actually give advice in terms of helping the market to invest in this particular market segment.
All right, great. So, when we talk about EGM, it was the first one, of course, that you're regulating.
Yes.
I want to know, what are the steps it took to actually get this off the ground? How is the progress so far?
Progress, I've seen they have launched, they are trading, and the bulk of the trades are, of course, with an underlying being currency, that is online forex.
Yes.
But the other smaller percentages in terms of indices and commodities. Now, the road to licensing, that is provided for under Section 4 and 5 of the regulations, the online forex regulations. And basically, you need to have be a registered have a registered company in Kenya. So which they did, that EGM is a registered company. Two, you need to have linkages or service level agreements with an international provider. So there are mother company Divisa in the UK, of course, that they have. You need to have key personnel, and that means that a chief executive officer who has experience in this particular market, and also compliance and AML officers, anti-money laundering officers. So those ones need to be in place. And the last one is, of course, the client-facing personnel. And all these personnel, from chief executive to chief executive, the others I've mentioned, they must meet the fit and proper as stated in the Capital Markets Act.
Okay, well, the mandate of the CMA, of course, is what we've looked at. And last month in a press statement, the Capital Markets Authority did warn Kenyans against engaging in online foreign exchange trading through platforms of unlicensed entities, and adding that it requires all online foreign exchange brokers not licensed to cease and desist. And it was a warning. It was, of course, very stark. You said that it's not going to be taken lightly if there are unlicensed brokers out there who are engaging in this online forex exchange. So how does the future growth for this space look like in the country, and what are some of the measures that you have taken, very quickly as we wind up, in order to prohibit the growth of this sort of cheating, if for lack of a better word?
Yeah, I think, the Capital Markets Act itself, from around Section 33 to 38, it actually deals with the market offenses and penalties. And then specifically Section 11, 12 and 13 of the regulations, online forex regulations, they do the same. So intermediaries who want to participate in this particular space of online forex trading and even contract for differences, they need to comply with the law. So the measures that we have taken, we have a strong enforcement surveillance mechanism.
Okay.
So get information out there on who is doing what. And then two is that there is a whole investigation and enforcement unit within the CMA. And then that's backed up by a department for fraud and investigation. And this has over 10 officers seconded from the CID headquarters. So if a case is of criminal nature, then they can deal with that. Yeah.
So it's definitely something that you're very stringently regulating, you're keeping an eye, you're monitoring, and as you watch the growth, and growth prospects are also in the future, of course, present.
Yes, and I just want to highlight again is that specifically within the regulations is that the trading is of foreign currency pairs. The Kenya shilling pair is not part of that.
Okay, all right. Thank you very much for joining me, Matthew Mukiso.